Australia reopens to the rest of the world, or at least some of the rest of the world. That's our main story this morning. Also today, Apple's market capitalisation moves to an incredible $3 trillion, a spate of M&A activity in the local market, and Crown Resorts says its Sydney casino is expected to open in the new year. It's Tuesday, the 14th of December, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Oscar Oberg from Wilson Asset Management about investing in small caps. But first, Sean, Australia is opening up its borders, even though there were plenty more cases of COVID-19 reported yesterday.
Yes, Michael, the Morrison government seems determined to not be spooked by the Omicron variant of the coronavirus, yesterday announcing travel bubbles with Singapore and South Korea. Also, skilled migrants and students will be allowed back into the country from tomorrow. That's exciting. Prime Minister Scott Morrison said no further delays in reopening borders were necessary. There are currently more than 160,000 foreign students with eligible visas to enter Australia and another 57,000 skilled worker visas. The Morrison government wants to steadily increase permanent migration back to about 160,000 spots a year. Certainly, that will help the economy and address skills shortages. Now, the decision to reopen came after advice was provided by the Chief Medical Officer, and the decision was based on evidence that the Omicron variant is milder. It feels, Michael, like a milestone moment to me, whereby international travel is starting to open up and visitors will start returning to higher education facilities and, of course, school jobs.
Yeah, it does feel like a milestone, but what about those COVID cases?
Well, Victoria recorded 1,209 cases and 2 deaths yesterday. New South Wales recorded 536 cases. Queensland reported 10, while the ACT reported 3 new cases. Now, there was plenty of traffic in and out of Queensland yesterday as its border opened with New South Wales and Victoria. Federal Labor leader Anthony Albanese was among the first to enter the Sunshine State, and he promptly threw his support behind Premier Anastasia Palaszczuk and her handling of the pandemic. That state's Chief Health Officer, John Gerard, said it was inevitable there'd be a spike in cases now the border was open. Tasmania's borders will reopen to vaccinated mainlanders from tomorrow, and, believe it or not, the Western Australian border will open from February 5. Not quite Christmas, but it's great to have a timetable in place in the West. There are also concerns for the Northern Territory after 17 new COVID cases were detected in and around Katherine. All this is going on locally as the rhetoric overseas, and particularly in the United Kingdom, becomes more and more dire. Yesterday, UK Prime Minister Boris Johnson warned of a looming tidal wave of Omicron, and it's expected to become the dominant variant in the country by the end of this week. Booster jabs in the UK will be brought forward by a month as a result.
Okay. So how did markets perform yesterday, Sean?
Well, it's a fairly quiet day, really. The S&P ASX 200 closed up 0.4% to 7,379 points, led higher by energy, real estate and materials companies. Financial and healthcare groups underperformed. The big iron ore miners jumped, reflecting higher ore prices, and the energy groups did pretty well too, on the back of higher oil prices.
And what about overseas markets?
Well, Michael, Wall Street was lower overnight, with the S&P 500 falling slightly from its record levels over the weekend. The run of central bank meetings this week has created some nervousness in the market. Technology stocks underperformed overnight, with Tesla down 5%. Now, one stock that largely avoided the negative trend was Apple. Its market capitalisation is now just shy of $3 trillion. Trillion with a TR. Only last month, Microsoft toppled Apple as the world's largest company, worth more than $2.5 trillion, but Apple's share price is up nearly 20% over the past month, and that's despite suggestions that sales of its latest iPhone products are soft. Crazy. European markets were also lower overnight. The Aussie dollar is buying 71.3 US cents, and Bitcoin had a fall overnight, dropping more than 5% to be trading around $47,500 US a unit.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning. Ramsay Health Care will pay $1.4 billion to acquire British mental health care operator Elysium Healthcare.
Yes, and it will push the Australian hospital group further into the UK National Health Service, as well as expand its offerings in mental health services, which, of course, is a growing part of the health sector, particularly post-pandemic. Ramsay Chief Executive Craig McNally said it was an excellent opportunity for the private hospital group. Elysium is an operator of long-term, medium and low secure hospitals and complex care homes for individuals with mental health conditions. It operates 72 sites and 2,000 beds and employs around 6,000 people. It's unfortunate, but such facilities are increasingly in demand. 1 in 4 people experience mental health issues each year, according to Britain's National Health Service, and about 3/4 of people with a diagnosable mental illness received no treatment in Britain. That's the opportunity that Ramsay sees. Now, remember, Ramsay began as a single psychiatric hospital in Sydney, and it's now a $16 billion private healthcare group with a mental health portfolio across Australia, Sweden and Norway. Its share price fell more than 1% yesterday.
Now, we've talked about this next one a couple of times before, Sean, but Wyloo Metals, which is owned by Fortescue's Andrew Forrest, appears to have won the battle for Canadian nickel explorer Noront Resources.
Well, at least it's beaten off BHP. Now, both Wyloo Metals and BHP have been discussing a takeover of Noront, potentially together. That fell apart and BHP announced that yesterday. That helped BHP's share price up 2.7%. But later in the day, Wyloo came out and said it would offer $1.10 Canadian a share for the group. Now remember, BHP previously had offered 75 cents, so $1.10 is a lot higher than that. Noront is in high demand because it owns a highly rated nickel project, which is, of course, one of the hottest commodities around the place at the moment. That's based in the so-called Ring of Fire region, 1,200 kilometres north of Toronto. I would say that right now, Wyloo is in the box seat to get that asset.
Yeah, sounds like it. And finally, Sean, our third story in our M&A trifecta, Korean steelmaker POSCO will buy out ASX-listed Senex Energy for $4.60 a share.
Yep, another one of those takeovers that's just been bubbling along. The board of the oil and gas group Senex has recommended the $900 million takeover, having spent 4 months pushing up the bid price by about 15%. Good work by the board, I'd say. That's, of course, what it's supposed to do.
Now, Sean, Crown Resorts and its new management team faced up to investors yesterday. How did they go?
Well, according to media reports, the Crown management team were very upbeat. They said the gaming giant's performance was getting back on track and it's successfully working with state gambling regulators. It hopes to open the Sydney casino early next year, though they didn't exactly put a date on that. The 6-star hotel and upmarket restaurants at Barangaroo in Sydney are performing well, Chief Executive Steve McCann said. Crown said it may expand gaming facilities in coming years, but it has changed how it deals with wealthy customers who can't account for their money. I hope they have. Mr McCann said the current takeover bid from Blackstone of $12.50 a share didn't recognise the value inherent in the operations, noting the optionality that comes with all of Crown's property ownership. Of course, the fate of that deal lies squarely with 37% shareholder James Packer.
Now, Sean, it's that time of year, not just Christmas, but also when the real estate investment trusts revalue their assets.
Such an exciting time for all those real estate people.
Oh, yes.
Now, you often get a bit of movement in the real estate investment trust share prices around now, and we saw that yesterday. Revaluations, which occur a couple of times a year, can mean the funds under management of the REITs jump substantially or, of course, fall substantially. For example, Charter Hall, one of the bigger property groups, yesterday said an independent valuation had resulted in a net valuation uplift of $3.5 billion, taking the group's funds under management to $61.3 billion. As a result, its share price jumped 5.6%. Also yesterday, Centuria Industrial REIT said demand for industrial space, particularly from e-commerce related tenants, had strengthened its leasing business, and Centuria Office REIT also upgraded guidance. Good for the shareholders in those companies. Brickworks upgraded its property earnings and now expects to report a record for the current half. All in all, Michael, the property market is doing well, not just residential, but across the board.
Okay, now, Sean, late last week you tipped as the big sleeper story at the moment being the shortage of an additive to diesel that could see major supply issues hit Australia not long after Christmas.
Yes, that's true, and it's sort of coming to fruition just a little bit. The additive, called AdBlue, reduces emissions and is compulsory in diesel vehicles. As we mentioned last week, an ingredient of AdBlue, called urea, is in short supply. and there's only 6 weeks' worth left in the country. Now, urea mostly comes from China or Russia, and while the local government has scrambled to find more of the commodity from other countries, drivers of many cars have been warned they may not be able to find diesel in the not-too-distant future. The diesel vehicles that will be hit include the Ford Everest, the Volkswagen Tiguan, the Audi Q7 and the Land Rover Discovery. Hopefully a solution can be found in the next few days for the drivers of those vehicles.
Okay, Sean, what's making headlines in today's news media?
Well, the Financial Review is reporting that Australia will back South Korea's membership of the Trans-Pacific Partnership Free Trade Pact. The Australian is reporting that Australia is poised to become the largest producer of mRNA vaccines outside the US and Europe under a $2 billion plus deal with global pharmaceutical giant Moderna to build a plant in Melbourne capable of producing 100 million respiratory vaccines a year, including future COVID-19 booster doses. And finally, Time has named Elon Musk as the Person of the Year. Certainly Mr. Musk, who is now the richest person on the globe, has had a financially successful year thanks to Tesla's surging share price. His company SpaceX has also sent 4 civilians into space, and of course his tweets have become essential reading.
Running through a few of the other stories around today, Prime Minister Scott Morrison met South Korean President Moon Jae-in yesterday, and the two called for peaceful cooperation, open dialogue and stability in the Taiwan Straits. Mr. Moon provided support to the AUKUS partnership between the US, UK and Australia, though he wants to also work with China. The backdrop to the meeting, of course, is greater ambition from Beijing.
Blood plasma group CSL yesterday confirmed it is in discussions to buy Vifor Pharmaceuticals, a Swiss-based group. There's been plenty of media speculation around this one, and yesterday CSL says there's no certainty around any transactions, but talks are ongoing.
Origin Energy has flagged it's likely to stump up $195 million to maintain its 20% share in energy retail and technology company Octopus Energy. Based in the UK, Octopus has been attracting plenty of investors, most recently a giant Canadian pension fund.
Yeah, all those investors like the technology involved in that one. Will be a good one to watch. Finally, Michael, opposition leader Anthony Albanese says he doesn't see the need for a royal commission into media diversity after a Senate committee report, backed by the Greens and 6 Labor senators, called for one. He said there was nothing to stop the creation of new media companies, newspapers or online news websites, or podcasts for that matter, and many had been established in the past decade.
They certainly have. And now what's the key overseas news this morning, Sean?
Economists predict China will start adding fiscal stimulus in early 2022. Good news for Australia. According to a report in Bloomberg, curbs on the property industry are expected to remain, but otherwise Beijing will potentially be more hands-off. At the end of their 3-day annual Central Economic Work Conference, the Communist Party's top decision-makers said the main priority for the next year is ensuring stability. They also vowed to front-load policies and keep the monetary stance flexible and appropriate. Staying in China, Evergrande's international bondholders are set for a lengthy wait as the indebted Chinese property group restructures itself. It had to come. The group has more than $300 billion in liabilities, and we will be talking about this for months. Nearly 2/3 of US companies are planning to require at least some of their workers to get vaccinated against COVID-19, regardless of whether or not they're legally bound to do so. That's according to a survey of thousands of employers. And finally, New Zealand's largest city, Auckland, will move to easier COVID restrictions at the end of this year, reflecting the declining trend in case numbers and rising vaccination levels. Good news for the Kiwis.
Yeah, certainly is. Now, Sean, up next is the Daily Interview, and today you're speaking to Oscar Oberg from Wilson Asset Management.
What I love about the interview is that Oscar runs through maybe 10 or 12 companies which his funds have stakes in. So this is the case. They've put their money where their mouth is. He runs through why he likes some of these companies. If you're an investor, make sure you listen.
Yeah, great one for investors today. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 14th of December, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.